Today in the grain market, soybeans fell. The futures did respond negatively to really positive news. The weather is hot and dry, and yet the market still seemed to pull back quite a bit. And I think that it's a little bit more posturing before the USDA report. I've got a few numbers for you that I think that might be helpful to kind of let you know where things are going. With the CVOL index right now, we're at 26.8%. And we've had a 34-cent range today, and we've been kind of a steady diet of a very wide range. So that doesn't surprise me that volatility is where it's at. The option open interest, I think, is kind of interesting. The little fun fact is the 2420 calls has a 19-lot open interest, 2420. So somebody's really making a big guess there. And we don't have much time left in the July contract right now. The highest open interest strike is the $15 strike, and it does have 13,000 open interest. So I think that those are kind of the things to look at now, especially when we're approaching a report as well as expiration and in a market that has rallied for many months now. So something to look at. Now, corn was steady today. We had two-sided traded. It was a little bit consolidated. Questions surrounding export numbers could be an issue with the USDA with the report coming up tomorrow. And I think that that's why the market kind of traded on both sides and just wasn't sure which way to go. So we're moving sideways. It certainly looks like the path of least resistance is really to the upside. But that remains to be seen. There's some issues in South America as well as ethanol numbers. We expect those to be coming out and tomorrow. So we'll see what that tells us, if that gives the market some direction right now. The CVOL for corn is at a whopping 44.7%. The market has just been very strong, and of course that's like an indicator that a lot of traders think that the market's moving higher. The option open interest in the $7 calls, or the $7 strike actually, is 22,000 contracts. I just think that that's notable. That's why I wanted to give you that number. In the July 1090 calls, now that is a fun fact here, there is 196 open interest. How about this? In the SEP in December, $14 calls, 500 each open interest there. So there's an expectation that we're going to have some big wide swings. I just thought that that was worth mentioning. But in December, the $13 calls has 2,000 open interest. So people are really making big bets on the upside, but still a lot to look for. And of course, we're really in the beginning of the summer. Now, wheat was lower today too. Improved crop conditions overseas in Europe, Ukraine, in southern Russia. That is really putting some pressure on the market. There is some rains expected in the north as well. So those kind of things, will affect the market. We've had a 19-cent range today. The CVOL is steady at 38%, so it has certainly dropped below that 40% mark, and it's kind of like holding. Option open interest right now, the $7 and the $6.50 strike are both at about 6,000 open interest. So it's hard to say about if the market's going to gravitate towards either one. Either one can happen. It's been very volatile for wheat. The fun fact is the December $18 calls, there's 500 open interest on the wheat side. So the USDA report coming tomorrow, like anything can happen, considering that we do have these new daily limits. So, this is definitely something to be watching for.